people have not been talking about global funds for a long time, as Indian markets were doing well until about 1.5 years back. Indian markets were one of the leading markets and people did not even think about that. Not only that, investors here did not have enough of information about global funds. If you take the basket of all the large cap funds, flexi cap funds, mid cap, small cap, and also include all the international funds which are available in India and do a comparison. If you do the comparison for the last 3 months returns and take the top 10, only one fund is a domestic fund. The same if you do for the last 6 months, the top 10 funds are all, with not even one exception, are global funds. That says, if your portfolio had some allocation to these global funds, your portfolio would have performed better than a pure domestic portfolio. And it's also good to have that geographical diversification by having a mix of these kind of funds. As we mentioned earlier, you should at least have a balanced risk profile, and 10 to 15% of your exposure at the max can be into these kind of funds.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
In this video, we intend to give a lot of clarity about investing in global funds, which are the talk of the town in the most recent months. People have not been talking about global funds for a long time, as Indian markets were doing well until about 1.5 years back. Indian markets were one of the leading markets and people did not even think about that. Not only that, investors here did not have enough of information about global funds. These were all reasons for people to not look into that area, which has been the cynosure of all eyes in the most recent months. Why is it so? Global funds are faring a lot better than the Indian peers in the last 18 months, particularly post September 2024, the peak after which market has been on a falling trend. Are global funds for every investor? Not. Very clearly, you should have a certain amount of risk appetite if you have to take global funds into your portfolio. When I say risk appetite, be prepared. While the recent months are in favor of the global funds, there will be a phase where global funds will underperform Indian funds. You should be prepared for that and don't expect global funds to always outperform Indian funds, as any asset class or any fund category may not always top the charts. Global funds are no different. They also will be immune to that kind of a risk, and there will be times when global funds may underperform the Indian peers and even other asset classes by a big margin. That said, allocation into global funds gives a lot of diversification effect to the overall portfolio, both in terms of return opportunities and also risk mitigation. While we talk about all this, let's also get into some of the numbers of the past, which will give you clarity, maybe also some confusion. At the end, we'll also clarify the confusions which you may come across while we talk about these numbers. If you take the basket of all the large cap funds, flexi cap funds, mid cap, small cap, and also include all the international funds which are available in India, and do a comparison. If you do the comparison for the last 3 months returns and take the top 10, only one fund is a domestic fund. The same if you do for the last 6 months, the top 10 funds are all, with not even one exception, are global funds. That says, if your portfolio had some allocation to these global funds, your portfolio would have performed better than a pure domestic portfolio. While you listen to the return numbers, you will get more curious looking at big numbers, but that doesn't mean all these funds may be meant for you. You will have to watch till the end to get clarity of what kind of funds would suit you. Maybe certain funds which are giving you high returns may not be meant for you. When we take the whole basket, which we mentioned earlier, the diversified funds across the popular categories, and when we also take the international funds which are available in India, among the top 10 funds, the top 2, the first one, which is Nippon Taiwan Fund, has delivered 65%, and Nasdaq 100 Fund of Motilal has delivered 21%. If you take any other fund below that, it is in the range of 17% and downwards. So very clearly, the topmost fund has delivered almost close to 45% more than the rest of the funds. The same way, if you take the last 6 months return, the topmost fund, which again is an international fund, which is the same Nippon Taiwan Fund, has delivered 95%. Then following that, are a lot of mining and metal funds which have delivered 40 to 45% in absolute terms in the last 6 months. Now, wait a minute. You should be thinking, oh, these funds are brilliant and I should be investing in this. Whether these funds are for you, you're getting the answer now. Listen carefully. Investors who are not into the aggressive risk profile. When I say aggressive, this is mostly meant for people who have already accumulated great amount of wealth or inherited great amount of wealth and not so dependent on only these investments or their income to manage the rest of the livelihood. And even if there are significant losses, even after the losses, the wealth available is more than sufficient for managing the expenses of their rest of the life. These are called the aggressive investors. They can afford to take exposure into these funds, as these funds which deliver significant alpha over the other funds can also underperform significantly lower than the domestic funds and other funds in a falling market. So the risk involved in this kind of funds is extremely high, and also note many of these funds are not available for fresh purchase at this point of time. Then for an investor who is not into aggressive risk profile, maybe a balanced risk profile or a slightly lower, what kind of fund can you invest in? That's the question. Ideally, these investors can take exposure to some extent, that is not more than 10 to 15% into two different categories. Again, broader categories which invest across market caps. One can be a fund which is US focused, and another can be a fund which invests in a basket of emerging markets. Why these two combination? US, all said and done, is 55% of the global market cap. The global market cap is about $125 trillion, and US alone is almost 55%, which is 65 to 70 trillion dollars of this. So of the entire global market cap, US alone is 55%. So you cannot miss US if you're looking at global investing. At the same time, please keep in mind, US may not be so cheap. US has seen great amount of rally in the last 2-3 years, particularly in the tech sectors, and because of the high valuations, there is high amount of risk which comes along with this. The next is a basket which we suggest of various global markets. There are funds which have meaningful exposure into markets like China, Taiwan, Korea, some amount of exposure into India. They can also take minuscule exposure into UK and US. So what happens when you take an exposure into this kind of a basket is, other than India, when other emerging markets perform, these funds tend to outperform Indian fund. So in a bear market phase in India, a mix of a US and other emerging markets basket can better your returns slightly more than a pure domestic portfolio. That doesn't mean when the domestic market performs badly, always the US or the global emerging market funds may do better. They may also suffer certain pockets, but there are a good number of times when Indian markets underperform, these funds may do well. And it's also good to have that geographical diversification by having a mix of these kind of funds. As we mentioned earlier, you should at least have a balanced risk profile, and 10 to 15% of your exposure at the max can be into these kind of funds. We have given a broader structure only, but the specific fund which suits you may differ one person to other person. So if you're keen to invest in global markets, to have the global diversification, and this is the time you are thinking about starting, you can very well contact us through the numbers given below, and we will help you in building your portfolio with the right mix of funds, including the perfectly suitable global funds.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.